What is up, everyone? Welcome back to the Schaefer Stock Market Podcast. This is Josh Selway talking to you again. I'm an editor at Schaefer's Investment Research. We do these podcasts once a week to give you a quick rundown of recent stock market news and other developments in the finance and business worlds. This week, I was sick for much of the week, not able to put in as much time and research as I usually do for these podcasts. So I'm just going to do a quick rundown of some of the things we covered this week. And there's actually a lot of interesting content. I was looking at what we had over at schaefersresearch.com, and it was hard to choose. It's hard to choose some things that I really wanted to focus on. So I'm going to go over a lot of different things, a lot of quick hitters. I also wanted to start with a broad view of what's been happening on the trade front, because we continue to get headlines every single day on the latest trade developments. So we're going to start right there. So to start this week off, we had the Dow selling off more than 600 points in the day. This was with Wall Street reacting to the latest round of tariff hikes. China was hiking tariffs on $60 billion in U.S. goods. Of course, this followed last week's tariff hikes out of the U.S. on Chinese imports. And then this week we had the huge bombshell with the U.S. placing Huawei, that is the Chinese telecom and tech giant, on what is called the entity list of the Commerce Department, which is basically blocking U.S. companies from doing business with Huawei. And this was a huge blow, very unexpected. And I was reading into this. Bloomberg had a lot of interesting coverage on this as well. And I saw some analysts saying that this could potentially cripple Huawei's business. And not only that, it could be bad news for U.S. suppliers of Huawei. If you're not familiar, I've mentioned it on a few pods in the past, but Huawei and the U.S. have been battling back and forth for quite some time. It's been a nasty exchange on both sides where the U.S. considers Huawei a national security threat, thinks that they are spying on people for the Chinese government. And as this goes forward, or has been happening, we've had European countries who continue to use Huawei technologies. So it's been this back and forth, and it was sort of lingering in the background when the trade tensions really to pick up between China and the U.S. I was kind of looking at Huawei and thinking that's just kind of an interesting side story to this, and now it's come right into the middle of these trade talks where the U.S. is really going after one of the largest Chinese companies and one of their most important innovative companies as well. And we actually covered over on schaefersresearch.com a few suppliers that could be hit hard by this move from the U.S. So we were looking at Neophotonics, that's ticker NPTN, and Skyworks Solutions, ticker SWKS, as two names that could be potentially hurt by this move out of the Commerce Department. And in reaction to this announcement from the Trump administration, you saw heavy put buying on both those names. So traders were gearing up for more losses from those stocks, which got hit very hard from that news, as you might expect. A couple other names that could be impacted by this as well. Qualcomm sells a lot of products to Huawei as well. And Micron Technology is another name that could be hurt by the Trump administration's move to put Huawei on this list. So aside from that, you had some headlines out of Chinese state media that was really pushing this angle of bringing in nationalism from the Chinese people to support the country during these trade tensions, and to say that they're not going to be pushed around, and to you could see that Chinese leadership is really trying to rally support. And another thing that was interesting is that when we were looking at overseas markets, it was notable earlier this week that before China retaliated on tariffs, you had Chinese markets sort of rally, and it was just by looking at the charts, it was kind of odd how Chinese markets rallied, and you even had news reports suggesting that there was a state-sponsored buying effort to lift their markets during this week. So that was happening as well, and you just had other Chinese leaders issuing some comments. You had one accusing the U.S. of using bullying tactics as well. So definitely not looking good at the moment. Many business experts, analysts, everyone covering the market continues to say, look, a deal is going to be made because both sides need it so badly. It is so important. But both sides are not showing their hand right now. They are trying to stay tough. President Trump suggesting that it could be a few weeks before anything is finalized with China, but who knows? We've been talking about this for a while, and as I said a while back, it's not a situation that you really want to make predictions on. Aside from China, we also had developments with the U.S. and Europe, where the Trump administration decided to postpone tariffs on auto imports from Europe, and that helped turn stocks higher on Wednesday. And then to end the week, we also got news about the Trump administration lifting tariffs, steel and aluminum tariffs from Canada and Mexico, setting the stage for a potential new NAFTA agreement. This has yet to be confirmed as of this recording, but this is CNBC reporting this, citing sources. So this potentially will be coming out by the time you listen to this. This may be confirmed by the Trump administration. So it's interesting to see the Trump administration sort of playing more nicely with these, with the North American countries, Canada and Mexico, as well as in Europe, easing back on some of those trade talks as well, while they're sort of digging their heels in with China. So it seems like making progress on one end, while these China developments are going in the other direction. And then lastly, from a broad market standpoint, just coming back to the U.S. for a second, today on Friday, when I'm recording this, stocks started the day in negative territory, but then shot higher suddenly on this on the latest consumer sentiment report for May, which was the strongest since 2004. So right now, at least, consumer sentiment is high in the U.S., and this is something that President Trump has been citing when he's being interviewed and talks about trade agreements. He says, look, we're in a great spot. Our economy is going well. The stock market has been doing mostly well until, this latest batch of tariff hikes. So he's using that as a bargaining angle. So that's just been his position on that. And again, as I said, more strong economic data out of the U.S. All right, we'll segue right into some specific stocks from trade, and we'll do some trade-related stocks as well. We'll start with Nvidia, who reported earnings this week. They reported strong earnings. The stock rose, and we were just focusing on one interesting comment from Nvidia leadership, where they talked about the Chinese gaming market and described it as vibrant. And the gaming business was what helped Nvidia beat analyst expectations. It was a strong point of their quarter. So it was interesting to see them describe the Chinese gaming market in a positive light. Nvidia has a lot of Chinese exposure. They get a lot of revenue from China, so that is important. They're always in the crosshairs when trade tensions flare up. And to touch on the retail sector here real quick, because this was one space that analysts continue to say would be hit hard by the latest hike in tariffs. And a couple names that were pointed out specifically were Skechers and Steve Madden. These are both shoe companies, with analysts saying that they could be hit hard by this increase in tariffs. You had brokerage firm Cohen, saying that consumers could see a 10 to 15% increase in prices at certain retailers because of the latest tariff hikes. And the brokerage firm also suggested that not all companies will pass along the cost of tariffs to consumers, though. So it depends on which company you're looking at as well. And one apparel stock that had a great week was Under Armour, which got upgraded at JP Morgan after analysts there met with Under Armour management, and they were impressed with what Under Armour had to say and the direction of the company. And Under Armour, when I checked earlier, was actually pacing for its highest close since December. So that's a stock that's seemingly been bouncing around in the low 20s for a while. It's made some big moves after earnings, but it seems like each time it'll give back those gains in the following weeks. But now it may have broken out of that $23 range. If it can hold that territory, it may have more upside ahead, as it seems to be gradually turning this corner from that huge sell-off it had a couple years back when it was trading in the 40s, fell all the way down eventually to the low teens. But since then, it's been hovering 18 to 22 range, and now still trying to break out as more analysts come around. There's still a lot of negativity around that stock, which as contrarians, that's what we like to see. Okay, moving on. Something else I was looking into briefly this week is this African swine fever outbreak that's been occurring in China. This affects hogs and pork prices and that market in particular. This is not something that can be passed on to humans, this disease, but it has been decimating the hog population in China. One estimate had it at 1 million hogs have been killed already, but someone else, an analyst I was reading, said that it's far more than that because it's hard to keep tabs on how many hogs have been killed by this disease. It's highly infectious and it spreads wildly, so that's having a big impact on global meat markets and especially the pork market, obviously. And this resulted in a bullish analyst note on Tyson Foods, that's ticker TSN, where an analyst at Credit Suisse said that the reduction in global pork supply could mean higher prices, which would be good news for Tyson Foods. So that was interesting. And another name that got tied into this swine fever outbreak was Deere Company, the tractor giant, ticker DE. They reported earnings this week, but right before earnings, JP Morgan Securities weighed in, downgraded the stock to underweight, set a $132 price target, and they listed a number of factors here. They said the swine fever outbreak could decrease the Chinese demand for soybeans, and they also said a stronger dollar is bad for Deere & Company. They listed the trade war, many other things, deteriorating fundamentals in the company, and all this weighed on the stock. And then Deere reported earnings, and it got hammered again. It's on pace for its lowest close in months, so a very bad week for Deere. I want to check in here with a few updates out of the weed space. We had Kronos Group, that is ticker CRON. That stock popped earlier this week after the company said it entered a supply agreement with MetaPharm Labs for cannabis concentrate. Another name in focus was Canopy Growth, ticker CGC. It got a buy rating from Alliance Global, who said that the company could become a global leader in cannabis and cited its buyout deal with Acreage Holdings, calling it a critical game changer in the marijuana space. And finally, fellow weed stock Tilray was in focus after its earnings release. It initially popped after earnings. I was tracking this one, seeing how it unfolded, and it popped after earnings, but has since turned lower in the following days. The company's revenue about tripled. It was around 200% growth year over year for the quarter, and the price per gram of cannabis went down slightly, but still, Tilray has essentially been just trending lower for months. It was last seen hovering around $46 per share, $47 per share or so. And this was a stock that jumped all the way up to $300 back in September. That was such a crazy day when Wall Street was really in this craze phase for the marijuana sector, and Tilray was the headline of that. And since then, no, it's just been gradually losing steam, moving lower and lower. And finally, I just wanted to point out that options have begun trading on Uber this past week. And so far, slight interest in call options. Weekly calls were popular. Some people speculating on some upside in the coming weeks. One of the biggest trades, though, was at the January 2021 25 strike put. This was likely a shareholder hedging their position. It was a roughly $2 million trade. So this would be someone hedging their position in case Uber stock falls all the way down to $25 per share. The stock was last seen trading around $45 or so, $43 per share, according to this chart I'm looking at now. So definitely we will be monitoring the options activity on Uber in the weeks ahead. Okay, ladies and gentlemen, I'm going to leave it right there for this week. I really appreciate everyone who's been listening. We're up over 3,000 downloads or so, so we've been gradually gaining followers and listeners. If you could leave a review wherever you're listening, tell us what we're doing good, what we're doing wrong. Check out Schaefer's on Twitter, StockTwits, Facebook, Instagram. We're trying to ramp up the content on there as well, or just head right over to schaefersresearch.com. If you want to follow me, I'm on Twitter at Selway, SELWAY 151. I try to tweet about stocks as much as possible, sometimes some fantasy football, sometimes some video games. What can I say? I'm a nerd. But guys, again, thank you so much for listening. I really, really appreciate it. I will talk to you next week.